play. Thank you for sharing your Wednesday night with me. This is AfroEconomics Live, and we are checking out the stock market tonight. And our participation on the webinar is off the chain. You all are really showing out because we're wondering, what should we do? What does this mean to us? What's going on? Why is the market tripping? And then some of you may not even have stocks, but you're looking at the news and you're like, what are they talking about? This massive sell-off and all this stuff, and what's going on? And especially when I am talking to all of us, you are AfroEconomics. It's very important for us to be very careful how we allow what we see to impact our total mentality about investing. Because we'll look at television and you'll see that the Dow Jones or the S&P 500, that these indices are down over the last 2 days dramatically. And you'll think that that means that stock investing is a bad thing. That stock investing hurts everybody, or everybody lost all their money, or you lost all your money in your retirement account and things like that. So that's why I love for us to talk at these times. These days like this make me think about how blessed I am to have had a long career in this business and to be celebrating more than 25 years in financial services. I just started my firm 25 years ago, but I was already an investment advisor, a stockbroker before I started the firm. And my clients, thankfully, came with me to the firm. But because of all that history, I have seen these headlines many, many, many times. I have, and my firm has survived 9/11. At that point, I think it was the first time in history. I know the first time, I can't, or it's been a long time. If they ever had done it before, they closed the New York Stock Exchange after 9/11 because there were so many transactions going through that they had to slow it down. It was, I would say probably, I can't remember a day in the business that I had to be so cool. And I immediately started calling all of my clients. We're doing a conference call. We're doing a conference call. We're doing a conference call. I did not back down. I was like, I was like, like seven months pregnant when that happened, and I was like this. And so I had my assistants and everybody in the office. It was like, we have to go. And because of technology, actually my staff is smaller now than I had to have a larger staff then. But it is amazing how much, because of technology, that I can accomplish if that were to happen again. Our forms of communication and the organization of my interaction with you, I can get to you via email and text messaging, quickly. So we can interact so much quicker than I had to struggle through calls back then, of just trying to get to everyone, because there nowhere was email as popular as it is now. Like now you can almost text as fast back and forth. I can text an email back and forth to a client. That's how often we're checking our emails. Emails on your phone, I don't think that was even, an option back then. So now we are able to get this type of information. We're getting more information, but just make sure that you take advantage of the fact that AfroEconomics is constantly in touch with you, and that we're always just a text or a phone call, that you're always, almost every other day, you're getting an opportunity to interact with me online. And you can, so that when you have questions about the market, when you have questions about your investments, especially with an investment portfolio that may be held under custody with my investment advisory firm and the custody that we use, then I know that you can access that online and constantly be in tune and keeping up with that which is exposed to the stock market and any investments other than your stock accounts as well. I can teach you. That's important to me, for you to know how you can keep track of what's going on. But I don't think that you need to constantly be on track of constantly checking. I mean, I can understand that, if you're looking at your checking account every day, but your investment account every day, probably isn't necessary. But with technology, you certainly could do it. But we need to have an understanding of what's going on in the overall market, but more specifically, how does that impact you? As I was having a conversation, with an investor, and she was telling about like that her husband uses a different advisor and she uses me. And she was saying that, the husband's other advisor, like, is constantly talking about, the market in general and how the market is doing and what this sector is doing and what this sector is not doing. And I was explaining to her that when you work with a major firm, because I worked at a major wirehouse, that they are constantly given reports of this is what you tell customers. And then, but when you're independent, thankfully I am, I speak specifically to each customer. I don't have to have, a script of what specifically I'm supposed to be sharing with the customer. But because of legalities and compliance purposes, it's much easier for a smaller firm that is independent to actually focus on the individual investor. And I feel that that is the most important thing to protect you from a market volatility and market success, to help you with market success, is to have a relationship with your advisor. Having a relationship with an advisor, if you look at the research on it, the typical person who has an advisor does better in their long-term performance. And I think it is because you're less likely to fall apart when you have a team, when you have someone that is specifically telling you what is applicable to you, not what our firm's stance on it is, what our, we feel, or what, the investment research person at the firm said that I'm supposed to feel, but what specifically applies to you? Why should I sell off all of this just because that's what you all think that I should do, that you should do, that's your stance on this particular stock, when that might not be relevant to me because I may have 20 more years? Or the fact that you think that I should hold on to it when I'm telling you that I'm going to be getting out of work and I'm going to need this for income within the next year. So make sure that everything that you look at is specifically for you, not someone else's or this particular company or this particular app's position on that equity. But more importantly, what are your goals? Because I can easily say that if I was sitting down with a person and they said, oh, I'm going to be working for the next 15 years, then more than likely they will not even remember this day. And by continuously investing and doing what is called dollar cost averaging, meaning investing consistently even through bad markets, they will be fine because they have the long term. But over the short term, this could be really ugly for you. And if a person is invested inappropriately at this time, this could hurt them a lot, because you have these things working against you, not just the virus and how the coronavirus is going to impact, because it's hitting some stocks. It's hitting, it's hurt the travel industry. You'll see some travel stocks hit. You'll see some technology stocks hit, and I'll talk to you specifically, schedule a time and we'll talk about that. But it's also, you have the 2020 election, and with the uncertainty about where we're going with the presidential elections, that you're going to see the markets move on that type of information as well. If it starts saying, oh, well, the market may have a certain response if it starts thinking that, oh, for sure, Bernie Sanders, this independent, is going to win, and he really doesn't like, rich people. So this is going to hurt, the economy. I mean, they might interpret it like that. I'm not saying it, but they might see it like that, the government's going to be doing a lot more spending, and, they might see it as a positive. So, but the risk to U.S. stocks could be significant because of this election and how the market overall looks at a particular candidate and how they might be in a leadership position. And on the flip side, the market might react positively to change, or might react positively to thinking that that Trump may continue in the position, and the market might like that because of stability or something. So what we have to do is, research shows that a particular person, if a person being researched doesn't think that their candidate won, or they don't feel good, or after the election and they feel that my person that I voted for didn't win, they immediately start making different decisions with their investments that aren't always in their favor. So you may have noticed that in AfroEconomics, I try to encourage us to maximize the current situation, to kind of depoliticize your finances and say, what in this particular political environment that I've been given, how do I make sure it works for me? And then we're also going to feel some volatility because the bond market has become more popular, which has brought down interest rates, because they don't have to pay as much, because people are beginning to see that they want to go to safety. I noticed on the radio, and not on the radio, on television, on the business channels, there's much more commercials about annuities, about bond market funds. I was like, that is amazing. Last week or two ago, you wouldn't have heard anything about it. Now they're like trying to work on people's fears, and they're talking about guarantees and things like that. So it's interesting to see the market, but people, the marketing of having how to give you somewhere to go now that because you're dealing with fear, and how to protect yourself. But I must say that you should have already been positioned, and that's why we focus a lot on that risk tolerance score. My clients, I focus on, I take their risk tolerance very seriously. And if they're not comfortable with volatility, I'm going to make sure that it's, as far as I can advise, that you only allow money that you're willing to lose to be exposed to the volatility of the stock market. And you might say, well, that's none of it. But that is certainly something that I talk through. Like, are you going to be okay if it goes down? Now, it's highly unlikely that you'll lose everything, but you have to be willing to accept that I'm okay with this being volatile. If you're not, you have to look at other alternatives. We have to look for protecting and having safety for that which you want to make sure you have available to you. But yes, over this week, the Dow has created the largest reversal that the market has seen in over like 2 years. So that only means that that doesn't mean that the market is down like dramatically. It just means that it's had a big drop because it was at record highs earlier this month. In February, the market was just reaching, the Dow reached a record high, the S&P reached a record high. They've given that up. They're almost down 10%. If you have an index that goes down more than 10%, then we're in what's called a correction territory. So the correction is anywhere between 10 and 20%. It's considered, a correction. And if we have another weak day, you're going to be more and more, you're going to hear that word, like this is a correction, blah, 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 But the way that I see it as your investment advisor is that I'm already thinking of that. When we set this up, we should have already thought that through. You already should have the security that you need. Because look at now, people that are, running to security, they're not getting the return that they could have gotten if the portfolio had just been diversified correctly from the beginning. So that definitely, we have to think these things through. And I have some other points some other ideas on how you can be prepared for a market change. The dollar cost averaging I talked about, having a professional advisor, very important. Investors should try to make sure that they separate your emotion from your investment decision process. And I believe that a good way to do that is to have an advisor, because there is someone out there who doesn't have anyone to talk to, and they're just doing everything online, or they're calling some stranger at an 800 number, and they made some bad decisions today that will cost them. And I say that it's not a good idea to make long-term decisions long-term decisions based on short-term changes. And are these short-term changes? Depends on what your time horizon is. There's some interesting investments out there called inverse exchange traded funds. Now, the inverse exchange traded funds give me the opportunity to put something in a client's portfolio that will go up when the index that it's connected to goes down. So when the major index, like the S&P, goes down, these inverse exchange traded funds go up. So allowing you to profit while the rest of the market is suffering. And sometimes they're called reverse equity ETFs. But these funds make money when the stock market dips in price and the index. So if the index, like the S&P index fund, if it goes down 1%, the inverse ETF will go up 1%. But just know that typically we're only using these for the short term, because if you see a positive market, when the market is going up, these things are going down, down, down. So of course it hasn't been very attractive. It would have been attractive over these last 2 days. But prior to that, you would have hated the idea. So, but those are some things to keep in mind. Ask me about it, and we can look at that. But and then looking at bad market times like this as buying opportunities, and a bear market, a negative market, definitely can be seen as a buying opportunity if you're looking at how to get good value. So you're looking for a good company that we've been following it for a while, and the price is down, $20 a share, but they're well managed, and that the reason that it's down is just because of the overall market, but there's still a lot of value in that company. Then a bad market can be a major buying opportunity. Yeah, and so definitely, there's not always all bad, but you have to have the cash available before, so that when the market is down, you're ready to take advantage. And then I also mentioned, invest only what you can afford to lose, or make sure that we invest according to your true risk tolerance level. So you said, oh yeah, I'm comfortable. I understand that it's gonna, fall down sometimes, but are you really? And then the little graphics and the little, you know, technology that I use, that it's cool, but you know, I know that pain of it, and I can't explain to you how heartbreaking it is when a client is disappointed. Like, it almost like makes me cry, because I really always want everyone to be happy. So it's like, I just have to make sure that I understand your true risk tolerance. No matter what you told me, I have to make sure that I understand that, yes, they're saying that they want this, but I better make sure that we secure a certain amount of this money, because I don't think they're willing, they, you know, really want it. Because, and a lot of people in our community, because the majority of Black people, unfortunately, have not had any exposure to the stock market. We'll buy a house, we'll get a rental property, you know, we'll do things, might even be in the 401k, but it won't be allocated correctly so that you can maximize the growth potential of the stock market. And that's why I love doing that with all the new members that sign up for the full membership. The first thing we do is I go, what are you doing right now? And I help you maximize the work plans, because it makes a huge difference. 2 years ago, I had a client that I reallocated her investment portfolio at work, and it doubled. And when we first did it, it dipped drastically. And I said, hey, I don't know, but you can do this. You can do this. Like, she was really upset. And because it just immediately, sometimes as soon as you make a change for the better, it will look like you made a change for the worse. But then after that, she stuck it out. She said, okay, I'm gonna try this. She stuck it out, literally doubled her money. So it is possible, but it is very important that you set up the allocation. It can make a big difference. The biggest impact on your investment return is the asset classes that you choose over the long term. 10 years is 10 years, but 10 years in a savings account versus 10 years in the S&P, there's a difference there. So definitely, we need to understand that our asset allocation is very different, very, very important, and understanding the difference between your time horizon and how you should be invested, having 1 year versus 10 years versus 20 years. So, and those are just some tips. And then also wanted to run this by you and help you think about this, like how you prepare for market change. Some people are always preparing for a market change. Like, the market goes bad and they're like, whoa, I'm so glad I'm not doing anything. You know, and I think of that as playing dead. You know, just like, you know, I'm going, you know, because I'm just going to sit down here and I'm just not going to do anything. Now, I think that playing dead can really work out for you sometimes, but it's like, when exactly in your life you choose to play dead. Now, later in your life, playing dead, especially at times like this, and not being exposed to the stock market, can work out for you okay. But over the 30, 40 years that you were working prior to retirement, playing dead, you know, is not going to work to your advantage. You have to be an active investor and get a good understanding of the different asset classes, right? So it's important for us to understand how important every dollar that you make is. And then as you get closer to the time of, I actually need this money, I have to use this money to live off of, then I can understand playing dead, because you do not want to lose that money. So it's like, hey, I've done it. I've fought a good fight. You know, you get to the end of the marathon, and that used to be everything that I was focused on. I remember going to, when we were having the high-tech times, and I went to this group, and it happened to be, I was speaking for a group full of men. It was just all men. And I was talking about portfolios and how I think, and there's one guy in the room, and this is like, I mean, most of you listening don't even remember, like when everything was about those high tech and people were buying stocks that had not ever, like it would just come out. It would just be a new stock offering, XYZ. Nobody knew what the company did, anything, and everybody was just buying it. People were quitting their jobs, becoming day traders and everything. So there's a guy in the group that was like, I said that I do this and I just make all sorts of money and I just buy this and buy that and and I said, well, I believe that stock investing is not anything like gambling to me, because everything that I will share with the person to invest in, it's based on their historical performance, an understanding of the income potential and future expectation of the company, and how profitable they are currently. So for me to tell a client that it's okay to invest in a company that hasn't made a dime, I'm just not going to do it. So he just blasts me all in front of it. He's like, well, then you're just too conservative then, and you're just so and so and so. And I'm telling you, within a year, people were going through jobs, shooting people, and because the day traders putting them into fake investments and everything. And I thought about that brother and I was like, I wonder what he's thinking today. Because there was nobody coming in trying to harm me. Thank God. Because I take care of everybody's money. That's my goal, to take care of them the way I would want somebody to take care of me. And most importantly, the way I would want them to take care of my parents who worked their entire career. I take people's money, and you got to do it too. Take your money extremely seriously. I've met people who have put their entire life savings into the hands of someone they knew nothing about, no portfolio history, just something that they thought was a good idea. That's right. And the reason, how you doing, Paula? The reason the investment that you're mentioning did well is because in times like this, you'll see a sector of the market called defensive stocks that will do well, like and consumer non-durables will typically do well. Things like deodorant and the companies that make deodorant, the things that we're going to have to need, toothpaste, lotion, things that we're going to have to do or buy regardless of the economy, their stocks will tend to do okay and better during bad economic times. So you might see it pick up on, those stocks pick up on an off day. And but at the same time, if you're looking for value, they may do so well that you're buying things at the top. You could be buying stuff like at the top, and there was some that are going down and are at low prices that could actually be better value. Because a good company is an even better company when you get it at a better price, but so just be very careful in things. And that's what I'm here for. Ms. Hayes said, having other investments, real estate, land, art, antiques, helps us get through bad market times. Well, unfortunately, they all tend to do bad together. The real estate just makes you feel better. But say a person has commercial apartments and the economy does bad. Well, they can't pay their rent. So we all tend to suffer together. The diversification is truly the key. You're right. That is, if you look at it for diversification. The stocks for those face masks to protect you from the virus must be going up. That's something to think about. They're selling out everywhere. That's so sad. But that is something to think about. That's something. That is something. I'm gonna go on Amazon, give me a face mask. I hope it won't come to that. But the CDC said we should expect we should expect it. It's not if, it's when. Terry, you still didn't give me the name of the group. You probably didn't hear me when I said that, but I was like, I need the name of the group. But I'm gonna tell you, we have, so for the, let's go, I have a Q&A. And then someone asked, should I roll over a 401k into a traditional IRA? Well, definitely make sure that you give me a call and let's talk about the differences between your 401k and the traditional IRA. In many cases, when people leave a job, they will leave money behind at the old job. And it's a good decision to make sure that you always actively manage your money. So it's a little easier to actively manage your money if you're no longer at that job where the 401k is, of course, to put it into a traditional IRA so that you'll have hopefully more investment options. So if you're where, and make sure you do it with someone that you respect their opinion. And I hope that will be me. So I'd be happy to offer a consultation to talk about the role of the 401k versus the traditional IRA. Because believe it or not, there are situations when it's best to leave the money in the 401k. Like, I've had a client where I've advised them, because if you're 55 and there's different tax laws, and at 55 with a 401k, you don't have to wait till 59 and a half. So if you're looking for liquidity that and you're under 59 and a half, then the 401k could be a better option. If you are looking for more investment options and having control over your portfolio, then the traditional IRA could be a better option. But that is an individual discussion, because you can't just say, like a client was showing me something in a book, and the lady who wrote the book said, oh, you should consider the IRAs because it does da 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 da. But she's not an active advisor. So I think you have a benefit of having these discussions with someone who actually does it, versus if I was just, and I'm licensed and I'm restricted and I'm regulated. So I have to be very careful what I share with you. But because I'm actively doing it, it's different. Like if I was a hairstylist, if I actually was a hairstylist, I'm going to be able to help you more if I'm giving you advice on doing hairstyles than if I was just a personality. So be careful between a TV person, a personality, versus an actual investment advisor. I just really think that you should work with people who do it not part-time, full-time, if you want to get the best service and the best options, and making sure that the person is regulated to look into your best interests. Because many people have licenses that are only applicable to the have licenses that only applicable to suitability, versus I have a license that requires best interest. And that means I have to make sure whatever I do for you is in your best interest, versus when it's just suitability, then it just means as long as it's suitable, it's fine, but it didn't have to be in your best interest. And yes, there's a lot of it out there. So definitely be careful. And Paula has a lot to say. Paula, I don't know. Paula is like giving y'all like history lessons and everything. Thank you. Get it all out, Paula. Now I taught her how to do, look, panelists and attendees, and she's just saying everything. But thank you all. Definitely I appreciate all of your comments, all of your questions. And I want to remind you about the March 6th, 7th, and 8th. And most importantly, if you have any specific questions about all the different stuff that I've said today, Andrea, Barbara, How you doing? To the whole Banks household, you know, all of you, definitely just don't hesitate. Mr. Lewis, and Mr. Dublin, how are you doing, Pastor? Definitely just call me directly, 1-844-JB Bryan, 1-844-522-7926. You all know the number. And let's talk about your specific situation. It's amazing, because it's very hard always to prepare a discussion about investments when I know everything is not applicable to all of you, but everything that I shared definitely can benefit you. So this will be recorded, and then it will be on the AfroEconomics with JB Bryan YouTube channel. And please don't hesitate to go back to the part that is of most relevance to you. So remember, invest only what you can afford to lose. Know your time horizon. Take advantage of market volatility for buying opportunities if you have the time. Let's learn more and ask me about inverse exchange traded funds if you're ready. Consider joining AfroEconomics and doing the comprehensive financial planning. Dollar cost averaging is a great strategy for taking advantage of volatile stock market times. And protect yourself, y'all. Let's stay healthy. I really do hope that this coronavirus doesn't impact us. That's the biggest concern of it, is for us protecting our health and keeping yourself healthy. Protect your immune system. I was thinking about with my, with everything coming up with the AfroEconomics Fest, I said, what can I do to make sure that I'm okay through 3 long days? And I said, you know, what I should do is just make sure that I get all my rest now, that I eat properly now, that I get my exercise now, that you don't do anything bad. Because sometimes when you're under stress, you know, you'll do things that actually stress your body, and that will hurt your immune system. What stresses our body? Mental stress, but also having too much sugar, you know, eating processed foods. So let's protect our immune system. And I haven't seen anything on TV about how to, you know, protecting your immune system, because we have to, like, they can come out with all of the stuff that they want, vaccinations and everything, but half of those are going to make somebody die, you know, from the vaccination. God created everything in us that we need in order to protect ourselves. So what we have to do is protect this facility that he gave us. Protect your mind. But when you protect your mind and keep your thoughts positive and straight, then it will protect you and help you make positive choices. You will not smoke. You will not drink. You will not do these things that will pull down your immune system. You will not have cake and processed food and cookies and all of that. Not at this time. We cannot afford to do that. So I ask all members of AfroEconomics, especially, for us to take an extra effort to keep your family safe. And Ms. Davis, who is an RN, said she takes homemade elderberry syrup daily. Good for you, indeed. And then what I take magnesium every night before I go to sleep. And I truly believe in it as a natural form of detox, you know, that keep the toxins out of your body. Don't eat bad, and make sure that you are cleaning your body. Clean it out. Protect yourself. Pastor Dublin said, moringa, beets, and probiotics. Now we know it. That's right. Please share it, y'all. That's beautiful. But that's it. That's what we need. That's what we're going to be doing at the fest. You know, that we have to exchange these ideas and keep ourselves powerful. Right, Kimberly? How you doing, Kevin? Let's do that. So if you please share any other ideas that you have on what has been successful for you and your family, protecting yourselves and keeping yourself healthy. But I truly believe, you know, the word speaks about the renewing of our mind. You know, I do feel that we need to make sure that we keep ourselves with a positive mindset so that we make positive choices. Yes, indeed. And I kept thinking, people need to guard their immune system. That's right, Paula, indeed. Well, definitely. Let's continue. God bless y'all. And I will see you Friday morning for our members only meeting and Sunday morning for the Soul of Your Money. And we'll be back next week on Wednesday. And that will be the last Wednesday before the AfroEconomics Fest 2020. It's going to be a blast, y'all. So talk to you Friday morning next. Let me know if you need me. Great week to you, Monica. Thank you.